Bitcoin is the dominant crypto asset network. And if you want a long duration asset that's going to last for 100 years, you need to completely decentralize it and make it permissionless. And you need to also thermodynamically embed it in the firmament of the world. The entire world has a multi-hundred-trillion-dollar store of value problem, which will be solved by the dominant digital monetary network. Since Bitcoin is only 650 billion in market cap, and since there's a $200 trillion addressable market, the most obvious thing in the world is buy into the dominant digital monetary network and wait for the rest of the world. You know, Bitcoin is maturing as an asset class. So if you look at it over the past 15 months, the liquidity in Bitcoin is up by a factor of 700%. The price is up by 700%. On May 18th, $13.5 billion in the spot market traded on the Binance exchange, and the price closed 7x more than it was on Black Thursday, which was the biggest trading day of 2020. You know, I mean, Bitcoin is the emerging dominant digital monetary network. If you're looking for a treasury reserve asset and you're looking for a generational store of value in lieu of gold or in lieu of any other scarce tangible property, then Bitcoin is compelling, and it's compelling because it's simple. So Bitcoin, the question has always been, will institutions embrace it? They have embraced it. If you actually look out over a 12-month time period, the story is 700% increase in liquidity and 700% increase in price. Some institutions bought $60 billion of Bitcoin at a good price last week, while someone got panicked over what I view as FUD, and they dumped it too cheap. So, you know, I think what you see is that the long-term players are actually pretty happy to have the opportunity to get at this entry point. And if I was looking at it, the number one thing I'd always look at is the price moving on no volume or in a lot of volume? Because that tells you the institutional sentiment. Bitcoin's one of those stories where if you're only casually interested in it, you just look at the price volatility, and the deeper you look at it, the more you think it's like a generational or a decade-long trade. We're in an environment where it looks like for the next 5 years, the money supply is going to expand by 15%. That means assets are going to go up by 15% if they're scarce. That means you have to buy things that are going to go up faster than that. And that means that the hurdle rate just got 3x higher. And not only is the hurdle getting 3x higher, but Amazon, Apple, Facebook, Google just had a meteoric run for a decade when it was obvious they were going to have a good run. They're going to have to invent something really cool to go up by another factor of 10. And might they do it? They might. Bitcoin is the dominant crypto asset network. And if you want a long duration asset that's going to last for 100 years, you need to completely decentralize it and make it permissionless. And you need to also thermodynamically embed it in the firmament of the world. And so the architecture of Bitcoin ensures that it will be embedded in the reality of the laws of physics because it uses energy. And it also ensures that it will be politically supported because there are actually facilities and political jurisdictions that are supported by those governments. And in the absence of the Bitcoin mining operations, which provide security to this asset, we wouldn't have the political support, nor will we have the link to physical reality and thermodynamic soundness necessary for us to make long-term bets over the course of years and decades. If what you want to do is save money and give it to your children and your grandchildren, then you need something that's sound, and sound starts with thermodynamically sound. So the proof of work architecture is by far the best architecture to design something that will be decentralized and secure and maintain its integrity over long periods of time. We can make something more energy efficient, but the price we pay is we give up the political support of the jurisdictions that run the mining, and we give up the thermodynamic soundness, and we make it a permissioned network where someone and somebody can decide who gets to participate. Bitcoin is open, sound money for the entire world. Everybody gets to participate. It's rules, but there's no rulers. And that makes a big difference.
If you want a list of the risks, there's a 1% black swan, unknown risk that no rational person can discount because we can't know the unknown. So it's a new thing, 12 years old. So there is the black swan risk. Take that into account. I think it's highly likely you're going to see regulatory FUD every quarter for the next 10 years. Oh, I heard this country was, the Venezuelans are going to ban it. The Chinese did this. The Russians did that. They might tax it differently. You're going to hear that. And you're going to get other asset class risk and FUD. The people that are invested in gold are threatened. People that are invested in other cryptos are threatened. People that are invested in what happens, when this thing gets to $10 trillion, it's going to be more threatening. When it gets to 20 trillion, it'll be more threatening. When it gets to 50 trillion, it'll be more threatening. It should logically, reasonably demonetize all the bond indexes, all the stock indexes, all the cash, and all the gold. And if it demonetizes all those things, then you're going to get FUD and political pushback. If you have a technology portfolio and you wish to invest in a technology that has risk and complexity because you're interested in decentralized finance and all of the applications in the Ethereum blockchain, then that's an interesting thing to consider. But if you're looking for a treasury reserve asset, a long-term durable store of value, I think Bitcoin is obviously the right choice. The entire world has a multi-$100 trillion store of value problem, which will be solved by the dominant digital monetary network. Since Bitcoin is only 650 billion in market cap, and since there's a $200 trillion addressable market, the most obvious thing in the world is buy into the dominant digital monetary network and wait for the rest of the world to start to realize this is the solution to their problem. There's no better risk-adjusted investment idea I can see in this world right now. My view of Bitcoin is it is the highest quality property or the highest quality asset you can own in the world right now. It's superior to bonds, superior to commercial real estate, superior to equity, superior to gold, to silver, to commodities and derivatives. And that's an easy observation in a world of extreme monetary inflation. With inflation rates of 15% or more expected for the next 5 years, it's easy. If the monetary inflation rate was zero, it would be difficult, and I would have to evaluate the differential coupons, rents, and dividend yields of all those other assets because they're fiat derivatives. If no one could mine any more gold ever again, and if it wasn't centralized, I would have to consider that. My view is that every time you sell Bitcoin, you're buying an inferior asset, and so you're selling a winner to buy a loser. And given the likely differential rate of price appreciation over the next decade, it would be seriously wealth destroying to diversify out of it.
We need to communicate that. And finally, it's a very sophisticated industry, but it's getting 10 times more energy efficient in the coming few years. And so those 4 stories, they're not out there in the mainstream media. We wanted to talk with Elon about how to communicate our message, and then also talk about how we could become more transparent in the energy usage and the efficiency of the Bitcoin mining network, because it's a great thing that's going on. We want to share it with the world.